Qualcomm, it's amazing. For the size of the company this is, since the beginning of 2016, the moves in these stocks over a 6-month period is staggering. And I'm about to say something, everybody's probably going to disagree, but $70 here, you might actually want to look at this. Fourth quarter guidance, I know, was a disaster.
Do you really? Or just
But this was a $50 stock. No, but this was a $50 stock in January. It was a $90 stock like a month ago. And here we are at the midpoint of that range. Tomorrow's going to be a messy day, I get it. But 70 is a really interesting entry.
You know, it's interesting. Qualcomm, to Guy's point, they might have lowered guidance enough for this current quarter that it's probably worth a do somewhere in the 60s. That thing is probably going back towards 65, Guy, before it bottoms out. But when you think about that with expectations lower, one thing that we know is that, yes, that they just they settled this long-standing license dispute with Apple. Apple, we know, is not going to have a 5G phone until 2021. So they are locked into using Qualcomm's chips right now. And when Guy talked about why Qualcomm came back in, it had something to do with Intel just sold their chip modem business to Apple. So that's where all the fear is. They might have lowered earnings enough. This stock is cheap, trading 11 times next year's expected earnings.
But I'll quasi-agree just in that I don't think there's any surprise.
What does that mean? You either agree or you don't agree.
Quasi-agree. I'm going to
okay,
keep.
Go ahead. Explain.
So I'm going to explain because I think the softer cell phone, smartphone cycle is no big surprise. The OEM market share, no big surprise. Huawei, no big surprise. You can make some argument that Huawei is transitory. So if you're looking to buy a company that probably got through some of its bigger kind of structural existential issues in Apple in the short run. And I also just think if you look at the chips more broadly, we got to a place here where if you look at the semis as measured by the SMH or whatever you want to look at, we're at a 94 9-day RSI just 1 week ago today. We're as overbought as they'd been in 2 years. And we pulled back 6% in 5 days because we should have pulled back in 6% in 5 days.
Yeah, and when I look at a lot of these names, I brought this up last week, I think there's a lot of tradable names out there, Mel, and I think there are the other names I don't mind really holding. Intel's one of my favorites. Now, after earnings, post-earnings, 56 and change, and then immediately fell right back down to where it is. I still am a believer in that company because I think that they can still deliver. I think the rest of these are almost all trades for me, whether it's Micron or AMD. I mean, AMD is constantly this extremely volatile trader. And I look across Micron, same thing, $39 to $49, I mean, in very rapid fashion. So I love those as trades. I think they are a nightmare to hold on to in terms of trying to figure out what you're going to do with this stock at longer term. I think that makes it really difficult. But I look at Lam Research, that seems awfully cheap right now, but it started off the year, it was up 50+% coming into earnings. This pullback's not even enough. I think if it gets under 200, then it starts to get back to being interesting for me.